Move to the first session of the day. The topic, new growth avenues in insurance, emerging opportunities and challenges for incumbents and digital first challenges. To discuss on this topic, we have an eminent list of panelists with us today. Mr. Sanjeev Jha from CoverFox, of course, had a personal emergency and he is covered by Mr. Vivek Sharma of CoverFox, Mr. Jatin Singh, Gram Cover and SkyMet, Mr. Ravi Khetan, CFO Digit Insurance, and the session is moderated by Ms. Alpana Singh. So may I have the pleasure of inviting and introducing the moderator for this event, Ms. Alpana Singh. Ms. Alpana is a president and head bank assurance, PSUs, RRBs, and cooperative banks at Bajaj Allianz. Alpana is a visionary and a result-driven woman, and amongst the very few women who hold leadership roles in the Indian insurance industry. She's been working in the insurance industry for over 30 years and is known for her strategic planning, problem solving, and organizational development skills. She has been associated with Bajaj Allianz General Insurance for over 17 years. Prior to this, she worked with the Oriental Insurance Company Limited for 14 years and under different capacities. She's played a crucial role in enhancing and expanding the distribution of the company. She took charge of the bank assurance channel in 2011 and now leads a large team of over 2,000 employees with thorough trust, commitment, and inclusiveness. Her constant perseverance, focus, and hard work has catapulted the bank assurance channel from being a minor contributor to a major player, not just within the company, but also in the general insurance industry in India. Today, the company has over 240 bank assurance tie-ups and growing. Alpana completed her schooling from Ranchi, Jharkhand, and is a bachelorette in English honors from St. Mary's College, Shillong, Meghalaya. She holds a degree in creative innovation from IIM Indore as well. Ms. Alpana, the screen is yours.
Wow. Thank you so much, Kalyan, for those very kind words for me and for the introduction. And I would like to welcome everyone to this wonderful session on a very, very relevant topic. And a very, very good morning to you, first of all. Yeah. So the topic for today is, new growth avenues in insurance, emerging opportunities and challenges for incumbents, and digital first challenges. So to deliberate on this topic, we have three very, very important speakers already. As Kalyan mentioned, they're experts in their respective fields. So let me first actually introduce our panelists to you today. So we have first Mr. Vivek Sharma, who is currently head B2C for CoverFox Insurance. Now, Vivek has diverse experience in insurance, in internet, media, and telecom space. Before CoverFox Insurance, he worked as Chief Revenue Officer with Rediff.com, and he was CEO with Sindabad.com, Head Business Partner Channel in Bharati AXA Life, and National Distribution Head for Tata Teleservices. He has also worked with ESPN, Star Sports, and ISB Bosch. Wow, so a huge experience he has behind him. A very, very warm welcome to you, Vivek.
Thank you. I appreciate nice words.
And moving on to our next panelist, Jatin Singh. So Jatin founded SkyMet in the year 2003. Now, SkyMet is a pioneer in private sector initiative in weather forecasting as well as information services in India. So it is an idea that has now evolved, into an agri-tech company with a heart. So taking artificial intelligence, machine learning, remote sensing technologies to the ground that helps to manage financial risk of smallholder farmers. So today, SkyMet has a massive IoT presence. And of course, Jatin will talk a lot about the presence and other things. So I'm not talking about it. Now, besides SkyMet, Jatin has also founded Gram Cover that brings in an innovative approach for insurance distribution in rural India and also effective use of technology. Now, Gram Cover is developing non-subsidized, customized crop insurance solutions, largely for smallholder farmers. So, Jatin, we have a lot to hear from you and learn. Very, very warm welcome to you, Jatin. Okay, then we move on to our next panelist, Ravi Khetan. So what do I tell about Ravi? He is an ex-colleague and a very dear friend of mine. He is a chartered accountant with 17 plus years of experience in non-life insurance industry. And currently, he is CFO at Go Digit General Insurance Limited. So the name for the company speaks for itself. Now, Ravi's current role includes continuous automation of finance processes to create significant values in simplifying insurance processes so that it's simple for the end user to use it, whether they are the end users or the customers or the business partners. So corporate restructuring, long-term tax planning, compliance, governance structure, major investment decisions and investor relationships all of these are his domain expertise. Ravi has actually worked with Bajaj Allianz, as I said, where I am working presently, from 2004 to 2017 at a various strategic positions. And as I would like to mention that, we used to run to him for every, strategic decision that we had to make, particularly related to finance. So, and also he's a member of Insurance Institute of India, an associate member. So a very, very warm welcome to you also, Ravi.
Thank you, Alpana.
Thank you. So, Jatin, I'm not able to see, but anyways, I will now maybe start the discussion for today. And since the topic is very, very interesting, and please just feel free to ask any questions on the chat, and we will take it up once we, move ahead with the discussions. So now coming back to today's discussions. So I would first like to start with Mr. Vivek Sharma. So Vivek, you are an expert in distribution. And as we all know, we have a huge untapped market in insurance with a penetration in, non-life segment as low as 0.94%, so not even 1%. And life insurance penetration is at around 2.82%. So a huge untapped market. You being an expert in distribution, what, according to you, are the untapped growth opportunities for the sector?
Sure, Alpana.
Over to you.
Yeah. I think that's a very, very relevant question, and all the insurers or entire ecosystem is grappling up over the last 2 decades since the time private insurers have come in. I think we are the right time. Multiple things have happened. One is that how do we reach out to the customer? And there are intermediaries, banks, agency, family agency led. So I have also worked in telecom. What I've seen is today, and if you look at 600 plus internet using customers in India, internet users, there is an opportunity lying ahead of industry how to reach out to that audience directly. And of course, there will be intermediaries involved. I want to give you, I'm saying the potential is huge, but I am tempted to share one example of one of my previous companies where we were grappling with the challenges in distribution. It was media, cable operators, and then came in the DTH in about 2007, 2008. In about 15 years, that mode of distribution has moved to about 55% today. What I'm saying is internet-led distribution channels, be it aggregators or the insurers directly, over the next 1 decade would get the predominant share. We have seen that happening. No, I don't come from an internet or a distribution. I have expertise in both, probably spend equal time in both sides of distribution. And we've seen it in media as well. Internet advertising was struggling for the last 15 years. Now we're going forward with radio for other players, right? But it has overtaken in US. And we see that shift happening in India as well. So next 5 to 10 years, the shift with which happen on digital side would surprise all of us. And opportunities, that's from the bigger picture. I think opportunities for the insurers is to roll out the products much faster. Underwriting has to be more targeted. There will be a lot of opportunities for many entrepreneurs to come out with startups, smaller and large. I think that will provide huge, and we need that ecosystem. If you look at mature markets like US, they alone have about 6,000 insurers and 400,000, huge count of intermediaries. I think that opportunity would be there for everyone. But to tap that, I think the right question would be how soon all the stakeholders can get benefit or can ride on this change in consumer behavior. So investment in technology. While consumers will come online, no one has to make an effort, but a lot of investment is required in terms of processes, in terms of post-sales claim settlement, back-end operations. If you ask me, there's a lot of room in terms of investment in automating all these processes. I think those are the opportunities. And then in terms of growth, it will be huge. I mean, if the industry has grown 13 times over the last 20 years, I'm sure the rate of growth would be much steeper over the next 5 to 10 years. I mean, I can speak a lot on this, but that's a brief answer from my side.
That's good to know. And yeah, you're actually very right. Now, how much do we invest in technology is very, very important now, because I think now we have to only think of online and how we can reach out to the customers without really being face to face. So yes, thank you so much for that insight, Vivek. So maybe I will move on to, before, again, I'll come back to you again for more questions. But in the meanwhile, I would like to move to Jatin. And, Jatin, you are, SkyMet is an initiative in weather forecasting and, information services in India. You being the founder of, the first such initiative in private sector. So government was always there. So, and also, Gram Cover is envisaged as, online insurance brand. So how is this, how did this idea come to you? Was there a challenge in rolling out this for you? And also how you see this, your initiative benefiting the rural population as well as the spread in insurance to the rural population? So Jatin, some insights from you.
Sure. It's been a longest journey. So I basically started out doing something which is completely unrelated, which was weather forecasting and basically dealing with data, weather data and things. Then as the business grew, I got into settlement of insurance claim, or what used to be the weather-based crop insurance scheme, which today is also known as the Pradhan Mantri Fasal Bima Yojana. Now, that is when I got into the world of crop insurance, which works, though it is a general insurance product, it works very differently from the regular rural insurance milieu. And then when I kind of hit that universe, I realized basically two facts. One, there was no insurance, literally no insurance in rural India. Nobody understood the concept. Nobody understood the annuities. And if ever there was a gateway into rural insurance, it was going to be via the crop insurance, because crop insurance is the single largest part of rural. The total premium subsidy for crop insurance in India is about 40,000 crores. For a lot of top insurers, it is actually the second line of business, one of those visible, invisible businesses. And as you know, as Mr. Sharma was saying, that digitization is happening and people are going online, I saw this opportunity of being able to enroll a large number of farmers for crop, and then cross-selling them other products, starting with simple micro-insurance products like personal accident. But there are assets which are valuable in agriculture, which so far has been either preserved of governments or not, or uninsured, like cattle. We also do small animals. We do goats, pigs, and buffaloes. And of course, then the industrial assets in rural India. We all know that the rate of urbanization in India is gaining. There is nothing in traditional sense that is rural anymore. Everything is urban. I mean, I almost feel that Kerala is the standard of what is going to happen to India over the next 20-30 years. Maharashtra has a 50-50 rural-urban split. Tamil Nadu has a 50-50 rural split. There are roads, there are automobiles, there are houses, there are shops, there are small industries, there's organized employment that is coming through. So therefore, the larger, creating that digital basket that can basically farm out these premiums and using technology, because in rural, the transaction cost used to be high. There's lack of understanding, there's vernacular issues, and trying to basically leverage technology, creating one simple platform that be able to, starting from the low hanging fruit like crop, automobile and cattle, and then getting into more complex things like health, or what we call parametric insurance, that if it doesn't rain, the farmer gets an automatic blockchain-based payout and those things. So basically, if I were to summarize this, agricultural finance is about rainfall. I came in because I was collecting rain data. Rainfall is used to underwriting, crop insurance, and then that's how this opened up.
Yeah, that's great. But and you have how many automated weather stations now? And
we've so in that sense we rival the National Meteorological Service, which is we do about 7,000. That's a completely separate business. So there's a lot of sensing information, lightning information. We also actually collect land record data and things. So that is kind of. But ground cover is the pure digital kind of general insurer, and life also.
So yeah, actually, we also do a lot of crop insurance in Bajaj Allianz, and we do get a lot of benefit through this. So what do you feel, regarding the technology, how important it is, and are the farmers using it? What is your experience on that with gram cover,
So let me divide this. Technology adoption is happening at a rapid rate. Younger people, everybody in India is on WhatsApp. I think if really finding more than Google, everybody is on WhatsApp and everyone is watching YouTube. Data costs are down, and also, living in urban area, you don't realize there's a large market for used mobile phones, smartphones, where so that is also absolutely there. A lot of people, because of Jan Dhan, UPI Connect, can actually do online transactions. ATM has become a standard, right? It's a verb today. So, technology adoption is happening. And also, if you adopt technology, your life is easier. And more than anything, your transaction cost is cheaper. That is what is driving technology adoption, if anything. Plus, your technology is developed to a certain level. It's to an amazing level today that you don't even need full literacy. I mean, really, how much do you need to operate WhatsApp?
Exactly.
And if you see voice coming in as an interactive way of being able to access data, which is happening, I would imagine that technology is going to become slightly better, and that is going to be the game changer. 4G, 5G, and voice and imaging, where using text and codes, will be taken care of. Then imagine what can happen.
Yeah. So actually, what you are telling, Jatin, it resonates with me very well, because what we have done is in our company for farmers, we have started an app called Farm Mudra. And in that app, they can. We have seen some 350,000 downloads of the app, and farmers are using it because you have to make it very interesting. It's just other than registering their claims or intimating claims or making endorsements or whatever, they can actually purchase small ticket size policies. Also, they can talk about they get certain ideas about what's the weather predictions and other things. So various, if you give value adds, that it can actually see farmers, we have seen farmers using it. It's a big success. So I can totally, it resonates with what you're telling. So yes, and thank you for sharing that. A wonderful, support to the insurance companies actually for this weather-based. Yeah, so now moving to our third panelist, Ravi. So Ravi, as you know, the Indian insurance scenario has actually undergone sea change since privatization. So today we have products for all kinds of sectors. We have talked about crop insurance, agriculture. So we have, insurance market has really become very, very robust in the last few years. And with the private companies coming in, as you know, earlier there was, say, 26% FDI. Was only 26% in insurance sector, and it moved up to 49%. Now government has moved it up to 74%. So in this last, I would request you to speak about the role of investment function in the financials of an insurer, and also investors' view. Or maybe, sorry, Ravi, this question I'll come to you later. I'll come to you for the first question, because this is the scenario. So I would like you to speak about what are the implications of all these regulatory changes that are happening, and your views on technology as a disruptor also, if you can talk about a bit.
Sure, Alpna. So first, I would like to say thanks to CFA Society organizing this first insurance summit. According to my belief, after mutual fund, this is the largest area where expertise of CFA colleagues is immensely contributed to the industry. At the same time, not only to manage the investment assets, to bring the profitability of the insurance companies. That is the largest contribution by the CFA colleagues to the industry. If we talk about sector regulatory framework and all those, so it is highly regulated. So this is under the supervision of Insurance Regulatory Development Authority, which is IAIP, established in 1999. And with the Government of India program of privatization around 2001, so Government of India allowed private companies to or private investors to come and invest in insurance sector. Before that, all entire investments was just made by the Government of India. That time, a small portion of 26% was allowed through the FDI invested by the foreign investors. And you will not believe it took 17 years to make it from, say, 26% to the 49%. And recently, after, say, 20 years, they made this of, say, 74%. But as a general belief, what we assume that once this is made 74%, there is going to be a lot of attraction, lot of money is coming in, pumped in by the investors. So really, we have to see how the regulator sees these increased limits, as well as same kind of regulatory framework, how that is evolving over the period and working for the industry. So this 74% is not that simple. That is also coming with along with a lot of terms and conditions. So regulator and Government of India want that control on the insurance operations always remains within the Indian management. This time they also prescribe that even control over the board of the insurance company also remains within the Indian hands. There are only limited options are given to invest in insurance sector. So investors are just given option to invest through equities. A small window of debt is given, which is very, very less attractive, given only after achieving certain years of operations and certain criteria and a small amount. So there is only way to invest for investors is in the equities of insurance companies. Second, if I talk about the sector is highly governed with the solvency regulations, and here regulator is a bit reluctant to give any kind of say relaxation. So here, sake of the clarity, what solvency margin here is, insurance companies are allowed to work up to certain multiples of their net worth. So therefore, there are proper checks and balances are maintained. So if somebody want to scale up, same time the insurer have to focus on the bottom line. If you are growing, but same time your bottom line is deteriorating or your net worth is deteriorating, investors are asked to put in the money. So here, this is going to be, say, in the same line. There is no indication that this is going to be changed. So the solvency is also not 100. This is, say, control level solvency of 1.5 times. If your liabilities are 100, you have to keep 150 as a net worth. So this is the thing which will, I believe, that will remain even after this change of 74%. If we look at last 3 years, not a single license given by the regulator, and that is mainly because of regulator want that whoever comes and interested put in money in the insurance sector to get the profits. Same time, they should be, say, scalable. There should be a proper commitment for regular participations of capital and bringing in innovative products. Otherwise, investor doesn't want that anybody is coming and putting some money and starting business. So I don't believe that this thing is going to change. Regulator will remain tough on allotting the new licenses. If you look at the third aspect of monitoring, India is the say largest or in transparent in disclosing the company related informations. Today, insurance companies are asked. Every insurance company is supposed to share their financials, legal, business, customer service level information on their website. And this is not a small disclosure. It goes beyond, say, order of 50 disclosures every quarter. Insurance companies have to put in on their website. Even sector is not listed. Thereafter, also the companies are asked to publish annually their results in the newspaper. So general public is aware that what is happening in insurance. For analysts, everything is available in the public domain. Nobody can hide anything when it comes on the transparency of the information. Same time, there are a lot of returns like monthly, quarterly, annual are prescribed. Everybody have to go with the radar of the regulator. And if those are not fulfilled, then there are certain kind of regulations, panel provisions. Regulator keep on conducting, say, kind of thematic or remote or full-fledged inspections periodically, followed with a big amount of penalty orders. So this sector is a kind of, say, kind of having a big or comprehensive framework of regulations. If you look at the products, so in insurance, especially if I say about non-life insurance, no insurance company can sell any retail product unless that is gone through the kind of a very rigorous process or robust process. Where say one product, if you file today, it will take quite amount of time, not less than say 6 months. It's fortunate if you get the product approval very fast, but it takes quite amount of time when it takes a lot of interactions within the departments of regulator, and then several interactions with the insurance company. Only after that, only that those products can be sold to the general public. Same time, the regulator now is pushing standardization of the products in non-life, which is coming like for retail health, retail properties. Now they came up with the standardized product for SMEs. This is mainly to keep that every product features across industry remain same. Basic features are not missing. Same time, terms and conditions are not, say, misguiding, misleading. So that kind of framework is evolved over the period, and I believe that regulator will always keep this control intact, and even after coming on 74%, this will even will become more stringent. If you look at about intermediary operations, that another area where regulator intervention is that is also of very high level. Regulator even say monitor day-to-day operations of the intermediaries, conduct their audit, also penalize them also if something is going wrong. Same time, regulator monitors intermediary remunerations. Same time, regulator monitors insurance companies' expenses and put a lot of say social, rural, or motor third-party obligations for insurance companies to fulfill. And here, regulator is not liberal on any of these parameters. Regulator always want that everything is done. If not done, then there are going to be various, either say first-time warning orders and later maybe become penalty amounts. So basically, changing of 74%, even these processes may become more stringent, so that policy holders, which is the focus area for the regulator for each of their decision, that will become that will remain in their center of thought process.
Yeah, Ravi. Actually, in the past few years, we have seen regulators getting very, very strict, and slowly it's getting, and as you say that, but one thing I would like to ask you an interesting question, which I was thinking that with this 79%, FDI, now we will see a lot many foreign players venturing into the Indian market. So, but of course, I think COVID situation did not allow them. But what do you feel? Will it happen or not?
So,
what are you?
Sure, Alpna. So we believe that investors are coming and their attractions is now building up. But same time, they will invest only in the companies who are capable to do some kind of say differentiation in services or differentiation in say product innovations, and create long-term values for the investors. So that investment, of course, will come, but will remain, say, limited to the startups or say organizations who can meet their expectations.
And there's a question from the audience. How is regulation in developed world vis-a-vis India? Are they equally stringent or,
So here I would like to mention one thing. So in India, two things are unique. One is cash before cover. So this is only in India. So if we go outside India, so there is policy issuance today, and then you go for recovery of premium. That is only prevalent in India. This is main differentiator or different approach in when we compare with the other countries, and that is good for insurance companies. Same time, it creates a lot of liquidity for the people who claim with the insurance companies. So this is the main differentiator in between these two. Second is what I mentioned. Indian regulator or Indian government is made insurance companies to disclose everything in public domain. That is generally doesn't exist if we go outside India. Most of the informations are kept, say, within the control of the management or control of the investors. But in here in India, everything you will get on the public domain.
Thank you, Ravi. Very, very. I think the audience would be, they would have learned a lot from you. So now coming to Vivek again. Vivek, before I come to my next question, there's one question from the audience for you. That is, banking industry has seen substantial jump in penetration during last decade. So with penetration touching about 80% now, with the next similar gains in insurance, will next decade belong to insurance? Vivek, this is for you.
I think that's a good question. And banking had I think, quite a long jump start ahead of insurance and the ecosystem, the private sector. I think here in the insurance side, both life and non-life, I think we have different challenges, but both will have in terms of penetration, it will go up. More than the penetration, I think the spend per capita will increase as underwriters, insurers, based on the data science, whatever, come out with the target audience specific products. One is that efficiency will improve, and two, the adoption of products using technology, data science should improve and would improve. So that's the push from the insurers, all the players in the ecosystem. Consumers will, quite sizable chunk of consumers will I think, will contribute in pivoting the industry from a push to pull. We have seen during this epidemic that the consumers who come and buy without any phone call, that percentage has jumped significantly. So there is a clear-cut consumer behavior shift. I think if you ask me, if I'll say that that penetration and the per capita increase would come more from a consumer pull. And of course, the ecosystem has to align and invest in the right areas. One of them would be speed to roll out the products. As Ravi said, if it takes 6 months to roll out a product, if in a position to roll it out to smaller segments say 6 weeks, it would be better. And other industries who have grown at exponential rate, that S curve, they had that speed to market. But it will improve surely.
So actually that brings me to a very important question. So if, it has to grow, I somehow feel that, traditionally insurers are actually susceptible to mistrust. The general perception about insurance companies are that they will not pay claim processes are too long drawn, the wordings are ambiguous. So how do you think this perception can be changed? Because if we need to grow, we need to have this, things sorted out, right? I
think that's a very, very critical, very, very important question.
Yeah. So anything what we can do, or do you see, like some with the help of some novel products coming in, or some technology which will help, remove this mistrust? What are your feelings on this?
I think in the value chain where claim settlement is the last, it starts with the distribution, then you have underwriting, and then the back office. I think the 3 pillars before claim settlement have to work together. On a distribution side, I think one is the awareness. Different channels have a different kind of awareness, and of course it changes from life to non-life products. There is also a small segment where the users or the intermediaries try to game the system, if I can use that word. So I think on the distribution side, using technology, either digitally, engaging with the customer, or through an intermediary, should be more specific, where the right needs of the consumer can be met at the stage of selling. Underwriting has to be more relevant. If a right product is being sold and designed, I don't want to get into the details, that will help. What would require, I think, in the immediate run is making the speed to the investment in the back office. on the life side, on the health side, the ecosystem has the TPAs, and then we have a half of the business on non-life with the PSUs, who are very strong on technology investment, but in terms of engaging the consumer post-sales, I think that's the area of investment, area of priority for investment, which has to be done. But to answer your point, there will be some players on the private sector and maybe startups. There have been few startups who have come only on the claim settlement side. I'll not be surprised if we have a unicorn over the next 10 years only addressing this space.
Mm-hmm.
And then you go back and design your product based on this.
Yeah. So products actually become very, very important. As you rightly said, we have to have new age, innovative products, easy, straight pass through. I agree completely with you. And another thing I was thinking, there's a lot of risks and fraud happening also. And that is perhaps the reason why the processes are so cumbersome. So what do you think, is there a way we can just make it more transparent, more easy to handle? How do we handle this part?
I think, again, I will say with the internet would play a lot of big role. 10 years ago, I had, even to buy a car insurance, I had only limited information. I mean, picking up a phone, going to the agent is an effort. Now a teenager can buy insurance, car insurance.
Yes.
Life would take time. So, see, the consumer awareness would help, definitely. On the other side, insurers have to, I think, play a role in this as well. There's no easy answer, but it's all about combination, product and the distribution. And then at the same time, the insurers have to be cognizant of the fact that if the settlements are in time, if the customer satisfaction is the priority, they will do well. And all the leaders, be it in banking and insurance, definitely score on these parameters, both on the PSU side and the private sector. I hope I answered your query.
Bilkul. Like rightly, you have mentioned. And there's no right or wrong answer. We have to try out these. And I think a good combination of products and technology, that should help us actually.
Yeah, I mean, and this mis-selling or fraud, it's prevalent in across sectors.
Across.
It's not only in insurance. Good thing is that it's highly regulated, and regulator is playing a good role here.
And as you know, as we see, if 99.9% of the people would not be the fraudsters,
Right.
So that 0.1% is something which we should take care by making our processes more strong. But it should not be so difficult that people just let it go. So that's what is the way. Yeah. Well said, Vivek. And then maybe I'll move to Jatin. So Jatin, there's one question from the audience. I'll start with that. So the audience says, during yesterday's session, CIO of Pingan mentioned use of AI for livestock insurance.
Yeah.
Do you see similar applications in India using tech, not just for penetration, but also for claims processes?
Oh,
we have answered a bit of it, but maybe you can clarify it further on.
It's already here. We're doing it. The problem is not on the technology side. The problem is on the adoption side. And insurance companies are not, sorry to say that, maybe it is the nature of the game, just like scheduled banks, not dynamic. Now, I don't know if it's the management system or the IT system or compliance or whatever it is. But the technology is being there, where you can onboard by a picture, where you can settle by picture. The technology has become so good that it can identify the same animal, whether it is living or dead, just by picture alone. First, we were trying to do muzzle. Now it is available for multiple animals, say from buffaloes, goats to pigs, and it is inevitable. It's not a question of when, of how, but when. So taking a leaf out of what Vivek was saying, people who are pure tech run with only tech. Now it's like the mobile first revolutions are the ones who are going to win, because legacy is not going to make sense. I already feel it doesn't make sense. I think a lot of times there is investment in legacy just for the sake of it. And the problem with that thought process, honestly, it's something that everybody has to think about it, is that everything then just collapses. I don't need so many people. I don't need so many buildings. I don't need so many surveyors. If it's all going to be this, it's going to happen.
So yeah, and plus, there's an interesting question from the audience also. Again, I'll put that before I move to my question. So he says there is a lot of focus on climate change these days. So what risk challenges this could pose to insurance industry, especially in agri sector? And could this also push up the demand of insurance in rural areas? Because a lot of, a lot of NatCat events are happening. And so do you think this will really push up the demand of insurance in rural areas?
This for me?
Yes, for you.
Oh, absolutely. See, you need to understand, I've been working on climate change for almost 2 decades now, and how the pattern of rainfall as well as temperature is changing. And the obvious connect we all make is with agriculture, but one of the things that ground cover is actually experiencing, and especially climate is experiencing from a data perspective, is NatCat cover for property covers, because you've got these flooding events that are frequent, that are far more intense. So Bombay gets flooded more often at a shorter period of time. You've got cyclones coming up in the west coast more than we ever did. You have east coast cyclones also going up in frequency. So there is a definite demand from the regular property cover and how to price it and how to cover it, and how can you kind of digitize the whole process rather than taking a stack cover. Agriculture, obviously, there is temperature, there is precipitation, there are pest attacks, there is yield index. Actually, on the agriculture side, there has been a lot of innovation. And that keeps on happening. But I would say property is the next one where NatCat covers, especially in urban areas, I'm not talking about rural, is already happening, and will change the way we look at things and we price those products. And the third one you will see, where coronavirus is actually quite relevant here, although the climate change link is not very clear, is health and viruses, because you've got your mean temperature going up and down. So if plants get affected, so are human beings, especially with dengue covers and all of that. So climate change is going to have a very clear impact. It's already having. The problem is the quantification, and the challenge is on, I shouldn't say this, but the perverse opportunity within that quantification.
Yeah, so you're right. Actually, you have clubbed coronavirus also with these natural calamities. It's also, similarly, it affects the business. And also insurance, somehow it has been a lot of face-to-face interactions, or physical interactions is something which was a very, very important integral part of insurance business as of now. There has to be an agent who goes, meets, anyone, they have to go meet the customer, explain to them. So as Vivek had also mentioned, we have to, it's a push product. So now with all of this happening, and it's becoming a very, as you rightly said, NatCat events, and now Corona, we thought it will go away in 6 months, then 1 year, then 1.5 years. Now the third wave is coming. So all of this is happening. So how prepared are we to handle such events? What do you feel?
I think, Corona, we've obviously shown that we are very badly prepared. I don't think anybody ever underwrote the size of a pandemic. I mean, look, I shouldn't say this, but the chaos with the covers, people are not getting the payouts. People are very upset. The regulator has also stepped in. A lot of covers that were there 6 months ago are now not available. I really don't know. A lot of hospitals, there's been so much litigation is going to start. Also, from a NatCat perspective, the problem is that something like NatCat or an extreme event cannot be underwritten without government support, because the size of the losses are so high. And agriculture is one place where we see that push and pull happening, where the government is trying to distribute that risk between itself and the private insurers. And sometimes it works and sometimes it doesn't work. I think a lot of that function is also because of especially on the NatCat, which is different from the regular general's motor health covers, is because these covers like drought become very political. And what has happened in Corona is because it became very political, as much as it was difficult because the scale was so big. And when things become political, then it's a different ballgame. And in a country like that, I with the kind of experience I've had, I've worked with government, worked with farmers, there is never going to be a perfect solution. It will always be push-pull. Sometimes it will work, then sometimes, something will come. For example, there's an election, so paisa baatna hai. So now There goes your understanding. So,
True. But do you think, like you have used technology to your advantage? So this is something which will actually help even in these calamities, NatCat events, and say something like this, a pandemic occurs.
absolutely. I mean, with the kind of digitization I'll tell you. So we did a COVID cover for about 80,000 farmers in Gujarat. Now you had to, technology is available, RT-PCR, you upload it. Now the problem is if somebody starts uploading fake RT-PCR reports, then the insurers start saying that is this from an ICMR lab? How do I prove it is from? So the problem is that it kind of comes back to the regulator. How well versed is the regulator with the challenges that technology is actually throwing up? How do I create my compliances in technology which are not only about bookkeeping? Because a lot of our regulators cannot imagine what technology can do. So for मुझे चालान चाहिए, मुझे इनवॉइस चाहिए, मुझे कागज चाहिए, digital मुझे acceptable नहीं है. Is there something digitized? So that is happening, but a lot of so technology is available. How does that technology get accepted in regulation? That fit is where I think the thing is. But for general insurance products like auto, health, life, I think technology will definitely move faster. On the NatCat, the data is available. But the problem is that with government organizations also, their data is also available. There will be differential in that data. There are municipalities will accept only the data that it issues. Now, so it becomes more complex.
Yeah, so while I'm at you, questions are coming. So I'll take one last question up for you and then we'll move to ahead. So what percentage of rural, India, of farmers you expect to opt for crop insurance?
You see,
and
Gram Cover is a rural insurance. Okay. Crop insurance across the world is a mandatory government program.
Yes.
In terms, I think the number of people who are into crop insurance is about 35 to 40 million after about 100 million farmer families.
True.
But most of the premium that is collected is through default kind of opt-in through the KCC loans. There are only 3 or 4 pockets of what are called non-only farmers that go and actually pay for insurance. They're Uttarakhand, Himachal Pradesh, Assam, and West Bengal. But the rest, say Maharashtra, Karnataka, Rajasthan, it's all coming through the cooperative banking system. So, to crop is that across the world, that is how crop insurance works.
Yeah.
Credit, and then there is underwriting against NatCat which is done through the insurance part.
Yeah. Thank you for answering this. So I'll move to Ravi now. Ravi, now for you also there are some questions which I would like to ask first, and then come to my question. We don't have much time, so maybe fast. How is the wants to know, is regulation holding back growth of the Indian insurance sector? Ravi, this is for you. And also one more thing. Do you think insurance companies should be allowed to use third-party asset managers instead of having to manage investments in-house?
Yeah. So very good question. So I can't say that regulations will restrict the growth. So regulations are to monitor for the better management of the resources and keeping always the policyholders in the center focus. So regulations allows various opportunities, but same time they will restrict the malpractices or anything going wrong, which can impact the policyholders' interest. So that is the answer of the first question. Second is regulator has prescribed detailed guidelines on outsourcing of the activities. And that is very, very strictly followed by the regulator. The regulator doesn't want anything which is crucial to the business and which an insurance company is supposed to do that can't be outsourced. And every single thing which we outsource, that we report separately to the regulator, and that comes under the scrutiny whenever inspections happens. So investment function, of course, we can't outsource. Even in case of, say, life insurance companies where NAVs are disclosed every day. There also these NAVs are calculated in-house, as well as a secondary or third option. They also get calculated from the outsource agencies, mainly bankers. But that is not purely outsourced. So outsourcing is not allowed.
Okay. So maybe, Ravi, while you're at it, can you speak about the role of investment function in the financials of an insurer and
Sure.
also investors' view on the sector?
Yes, yes. So here, if I say about investment function in the insurance company, I will go with the numbers. And here again, say CFA colleagues add lot of values to the sector. So if you look at say 1920, industry has generated an investment income of around 300 billion INR. And that is after that also entire industry was negative in profit about 15 billion. So you can see after generating of 300 billion of INR investment income, industry overall was having a negative PAT, profit after tax, negative by 15 crore. So it is a kind of big leverage to the business. Today, almost every business decision happens basis what kind of investment income is coming because of cash flow. And basis that decision happens whether to write the business or whether not to write the business. So that is the one part of it. Second is AUM. So overall for non-life insurance industry, which is having say around 3 trillions of assets, which is largely say invested in the debt securities, mainly goes in the government oriented or government securities. Around 45% of investments are made strictly in the government of India and state government bonds. 25% goes to the housing and infra projects, which are priority sectors for the government, and rest 30% is invested in the approved securities, which is also basis several prudential norms. And with their regulator has prescribed several conditions of investing, how much you can invest in a group, how much you can invest in a company or in a kind of sector. So again, this area is also kind of highly regulated.
Okay, thank you, Ravi. So there are so many questions coming in, quite a lot for Jatin and also for Vivek now. Of course, Ravi has answered quite a lot of it. So one thing from Vivek, a short, because we don't have much time, consumers think it is better to opt for bank-sponsored insurance companies as they might be more stable to exist in 20 years from now. So this thought, will it change? What does this mean for a private non-bank insurance companies? This is a question coming from our audience for you, Vivek.
Yeah, I think that's a good question, and you're the best one to answer. But let me, I think there is a lot of trust between bank and the consumer. Let's not, that's the fact. And it's, no one changes a bank. So I think that trust will continue, and that's a win-win for everyone, insurer, bank, as well as the consumer. That's the fact. But if your question is that would the non-banking insurance companies will do well? Yes, there's a huge opportunity. I think the same question can be asked in a way that in recent, if I say 4 or 5 years time, the new age or the insurers who entered late, Bharti AXA, of course, we also try to get into banking tie-ups. Now there's an opportunity to ride on the internet base, and there's ability and there's opportunity for insurers to reach out to the consumers directly. For insurers directly, for web aggregators like us, I think it's last point. Let's not forget. I'm just repeating. There is a shift happening. A small segment to begin with, then eventually it will grow. It will become more of a pull product, which will help those companies who show the relevant products to the customers. Customer would be king end of the day.
Very rightly said. Unless we move from push to pull with the correct, the right product and technology, then whether it is bank sponsored or not, it doesn't really. It's
for example, last if talk about our company, CoverFox, the consumers come and buy bike insurance without any assistance.
Yes, and that's what like we have in Bajaj Allianz 2-wheelers 2 minutes. So in 2 minutes you can scan the QR code and your 2-wheelers are insured. So we have now a product. So and it is a product that matters, and how technologically evolved here that matters. Yeah. So one question for Jatin, please, because this is again, interesting. The audience asks, man-cat, yani man-made cat events, which is related to poor urban development. this is a bigger problem, that we have seen also now, flooding, etc., happening due to, poor urban development. So any thoughts about this? What do you feel will this change? Jatin, this is for you.
I mean, will it change? No, I think it's going to get worse. Urban development is horrible. And it's going to push up the cost of all the NatCat related insurance, if it is property, health, or if it is motor. I mean, Bombay, rainfall and how way it is. I think it is a serious challenge on how are we going to finance this kind of man-made disaster that we built for ourselves.
Thank you, Jatin. And there's one question which I would personally like to take this. This is, can the photo identification work with dogs also, which grow very fast? So this photo identification, for dogs, because they grow, suppose you take an insurance policy for dogs, they are a puppy and then they grow. So yes, it does work, because we have a lovely pet insurance product for dogs, and we go by the breed and the various colors that the dog has, and it does work, because pet dogs particularly, they are very, very close. It's a very individual, it's like personal health insurance policy or personal home insurance policy, that also a dog insurance policy or a pet dog insurance policy. So pet dog is what I'm talking about. And here, it's not that suddenly something will happen and a person will fraud. So as I said earlier also, there's just 0.1% fraud happening, and in this case we will of course the photo identification for dogs will work, even if it's in a pup stage and then they grow old and something happens. So that's my answer to that. So yes, one more question, Jatin, for you before just 3 minutes to close, but so many questions coming in. How do you see relevance of blockchain technology in insurance sector, and does this have potential to change the way insurance industry works? So blockchain technology.
I think blockchain, I mean, I've tried blockchain 2.5 years ago. The problem is insurance companies are not going to accept it. And that is a fact. Okay, or a new insurer that does only blockchain, because there is, say, a blockchain that is open, that is immutable at every step. Now is the management going to accept it realistically? So once it's in, there is no way out, right? So if I have a damaged car, or I have a data coming from a rain gauge, or it could be anything, as the sequence of images or data becomes clear and goes input, and it is completely immutable. I think the person, a neo insurance tech company or a startup that does only this is the one that's going to take off. Anybody invested in legacy systems, I doubt it.
Yeah. So Sachin, Jatin, to add to this, we have, more than 2 years back, we started this app where a customer can actually, take the pictures of their damaged vehicle, scan it, send it to us, and the claim is paid immediately, after giving the NEFT details. Because with the help of blockchain technology and other artificial intelligence and all, we have been able to do this. So you're right. Actually, a new age company, or who are who change fast, and start accepting this will work for that. So you're right very much. So thank you all. I think I would really like to thank Vivek and Jatin and Ravi to share their wonderful insights. So many questions coming in, which means that people have really found it very, very useful. Thanks a lot for joining in. And over to Ravi for closing. Kalyan for closing. Over to Kalyan for closing this.